Asian shares fell as investors watched the escalating situation between Russia and Ukraine. Markets across Asia were in negative territory, and in Japan, the Nikkei declining 1.8%. Hong Kong's Hang Seng Index was down about 3.6% in late trade. On the earnings front, Alibaba will be reporting its third quarter earnings. Europeans markets also dropped about 2.7% in early trade, with banks tumbling about 4.3% to lead the losses as all sectors and major bourses slid in negative territory. Locally, we had results from Discovery deciding to hold off on restoring its dividend, even as it reported a 26% jump in normalized half-year profits and said that the big bets on growth initiatives were showing signs of paying off. That share price down about 4%. But to give us some perspective in terms of how the markets are reacting so far with regards to the Russia-Ukraine tensions, we are joined by Cornette van Zyl, who is an investment analyst at ABSA Asset Management. Cornette, thank you so much for your time. I'm going to throw you off here a little bit. It was red across the screens this morning, depending on what time you sat in front of your computer. Take me through your morning. I mean, your reactions when you saw what was happening Asia, Europe, and locally.
Yeah, so what a day to comment on the markets. Yeah, Nastasia, I mean, we opened up deep in the red this morning, the JSE down nearly 2%, and we really follow international markets down. I mean, the S&P and the Nasdaq closed deep in the red yesterday, looking like it's going to open in the red again today. Europe down, Asia down, Australia down. And I mean, this is really, as you mentioned, on this escalation of the tensions between the Ukraine and Russia. If you dissect our market, the banks are down more than 2%, life insurance companies down more than 4%, South African retailers down deep in the red. And then let's talk about Naspers and Prosus. I mean, those are two really, really big stocks. These are high beta growth stocks, and they follow international markets. Those are getting hammered. Naspers and Prosus down both 6-7%, and also Richemont in that category down more than 7%. So it has been an incredibly red day on JSE. The only sector that we're seeing some light in and some green is the resource sector. As you can imagine, with this risk-off environment that we're talking about, gold is rallying. So your gold shares, Anglo Golds, Goldfields, etc., up 10-12% at the moment. And then, I mean, as Russia is such a big exporter of energy, oil, gas, palladium, platinum, the metal prices and the commodity prices are all rallying as well. Platinum's up more than 3%, palladium up more than 7%. So you can imagine that our platinum stocks at the moment are up strongly as well, as is Sasol, because, I mean, oil is breaching $105. That is the highest oil price that we have seen in 5 years. So there are some green on the screen in the resource sector, but the rest of it is really looking bleak at the moment.
Right. As we continue our conversation, we're going to put a graph on screen that I've managed to put together where we actually look at how the Russian markets are performing, and we actually benchmark it across the S&P 500 and European stocks. But while our viewers have a look at that particular graph that we have on screen, how do you think central banks are likely to react on this? Because this is a tricky situation. On the one hand, you would think it would delay monetary policy tightening, yet on the other, you know, it fuels inflation.
Yes. Yeah, look, it's a very difficult situation indeed. I mean, all of this increases in commodity prices will lead to inflation. But on the other hand, you know, it's also going to weigh on growth. So you have a stagflationary environment, high inflation and low growth. And typically central banks don't want to hike interest rates into that environment because you are going to weigh more on economic growth. Plus, you are not going to have an impact on the inflation because the inflation pressures are coming through from commodity prices, which are outside of your control. So it's a very difficult situation, and I think it will be dependent on country to country and what's actually happening from an economic point of view in that particular country. But I would venture a guess to say that central banks will be a bit more hesitant to hike aggressively and to tighten aggressively into a stagflation environment.
With all of this happening globally, one would be excused to forget that locally we also had financial results come out, the likes of Discovery releasing their earnings. What did you make of the numbers?
Yes, so these were the first half 2020 results for them. They've got a December year-end, so this covers the period from June until December. It was well guided. They put out a very detailed trading update about a week ago. Normalized headline earnings up 26%. That's a nice strong recovery. Operational profits up 8%, which was very, positive considering the impact of COVID. What was particularly positive for me in the results is that since June and after the sort of end of the Delta wave of COVID, they didn't have to put any additional provisions through for COVID claims in this 6-month period, saying that what they've put away up until now is enough to cover them for the fourth wave, for Omicron, and possibly for future waves. So those are very positive. On the negative side, they withheld the dividend, but I would say that that's a prudent stance. This is an insurance company. They paid out 6.4 billion rand of COVID-related claims so far during the pandemic. Rather be a bit prudent and hold back on that cash dividend for now.
In an environment like this, are you seeing any opportunities? Is there a buy the dip opportunity?
Yeah, so one must be very careful in volatile markets like this, especially when you have such a black swan event like this Ukraine-Russian issue right now. But I would say, if you just go back to yesterday, we had a positive budget. We are cutting corporate tax rates. That should be positive for corporate earnings. We have an extension of the basic income grant, or the SDR grant, the special relief grant. Those will be positive, for consumers in general. So we still like SA Inc. stocks, and where the opportunities arise on days like today, some of the banks, maybe some of your retail companies, where you've got a bit of tailwinds from this economic recovery coming through in South Africa, we would still be buying them. We also have been taking a bit of a more defensive stance in the portfolios. We like things like healthcare, British American tobacco, things that are more defensive and generally not as highly at this point.
Before I let you go, we've got Alibaba releasing their earnings in about a couple of hours. What will you be looking for?
Yes, so just bear in mind, Alibaba is different to Tencent in the sense that they're more focused on e-commerce, where Tencent, which obviously plays into Naspers, is more focused on payments and gaming and advertising. And the e-commerce space where Alibaba has been playing in has been less regulated so far than, the pressures that we've seen on gaming, etc. So the story for Tencent. So we are expecting strong earnings from them. I think what would be particularly important is that we have seen a slowdown of a reasonably high base in China from an economic point of view, and we would want to see what the impact of that is on a company like Alibaba.
Conette, thank you so much for your time. That is Conette van Zyl, who's an investment analyst at Absa Asset Management.